Good day all. Ira Epstein of Linn and Associates with your metals market update, your weekend edition for this Thursday. Yep, it's not Friday, it's Thursday, April 18th, 2019, and we're at about 1:50 in the afternoon. So you still got some trading behind us, but believe me, most traders are gone. Good Friday's tomorrow. There's no trade to speak of. Sunday night's the first time that we'll get any real volume coming back in. That's Easter, and I want to wish everybody happy Passover, happy Easter, enjoy the holidays, drive and be careful. Very important. Now remember, on the weekend edition, we're going to look at the longer term charts, not the daily charts. So we'll start with a monthly chart, then we go to the daily. In the gold, on a monthly chart, you've just been sitting here in between the black bands all the way back, if you take a look at it, for about 4 years, 3 years, right in that zone here. Just keep going sideways, which means the market hasn't done much. Yes, you've had recent rallies into the 1350s and breaks into the 1160 zone, but all in all, if you really look at it, the 18-month moving average of closes, about where you're trading right now, has been where this market's been sitting, and a big part of that problem has been lack of inflation. Now, we just got through an event today with the Mueller report, and I'm sure we're not through with the Mueller report, but it was released. Now the uproar will begin over with was there any obstruction or attempts at obstruction, whatever they can do. The simple fact is the report's out and we'll hear about it for a while, and that's going to be the way it is. When we come to a weekly area chart of just closes, this chart doesn't look good. 1329.20, now you're down about $50 from that, back into the 1273.30 zone. More important, you're staying under the 18-week moving average of closes, so the bias stays down. When we go to a bar chart, you can see how this market peaked out up here, and the pattern is one of where you're making these lower lows, and you see that really clear when you put a swing line on it. The swing line shows that you've got lower highs, lower lows. To break this pattern, you'd have to get over 1309.10, and because this week's low is the lowest of the lows, even if you did that, you'd end up with a pattern of a lower low and a higher high. That would not be a trend. I define a trend if it's downtrend, lower highs, lower lows, excuse me, uptrend, higher highs, higher lows. No trend would have in some manner the higher high and a lower low. You don't have that. You're in a downtrend. Next thing I look at are key moving averages. Now, the 200-day moving average, I don't think it's as popular in metals as people would want you to believe, but I'll put it on the chart. I think the 100 is very popular, and you're down to that, and that's supporting the market this week. And of course, the 18-week moving average. What right now, as I'm reading the market, I see a market with a trend down as defined by the swing line. We've gone to a support level of the 100-week average. Resistance would be back up at the 1296.70 level, the 18-week average. If this gives ground, I start looking at what's the next possibility. One could be the 200, and I said day, this is week. That's the 200-week moving average. I just mislabeled it. 200-week right there. And I look to see where the Bollinger Band is. Why the Bollinger Band? Markets will trade within a Bollinger Band 95% of the time. But more important to me is the first challenge of a Bollinger Band is often an area where pros take dollars off the table. It could have been up here. The market pulled back and then it moved. That's fine. The first challenge here, no. You come all the way back to here. And notice how the market hit it, went back up, and then it began its move. Well, that puts into play wherever this Bollinger Band comes in if the market's going to continue to exceed through this 100-week average. Let's call it somewhere in the 1260 range. And you can also do this. You can see it's moving $7, $8 at a time. It's probably going to come very close when we reopen the market next Sunday into the 1270 area, which is getting close to the 100-week average. So I'm getting to an area where I'm expecting some support, even with momentum pointing to the downside. When I come to the GLD, the popular ETF, you've got the lower highs, lower lows, very similar to what I was showing before. Here's a market that reverses, goes down, stops at the 18-week average. The very next support under it's the 100-week. Market goes there. If it's going to rally, I'll look for the 18-week to be resistance again. Went through it, but then came and settled under it. That puts back into play, believe it or not, the 100-week. Just keep thinking this way. Every time you hit that red line, these other numbers become what we call active. Think of your kid in the backyard on his lawnmower, knocks down the fence. Until you put it up, it's not resistance, right? Well, when you hit the 18-week average, now the support of the 100-week comes back into play. And that's just what you did this week. If it continues, I look for the lower Bollinger Band. Is there anything bullish on this chart? Absolutely nothing. And like the futures, even if it were to rally over the last high of 123.77, you wouldn't start a bull pattern. You'd have a lower low and a higher high. When I come to GDX, the popular miners stock, first my eye goes here. I see momentum down. Second, I see what the market's done. It's now trading at 21.32 underneath both the combination of the 18-week and the 100-week. And notice how this market was bringing those two numbers together last week. You went down to this week and you settled under them. What do you think happens if you rally next week? I look for that to be the resistance point. But at this point, trend down, no other moving average to support the market. So it could be, if it decides to move to the downside, the lower Bollinger Band. The gold-silver ratio is acting like it peaked out. Again, in this area. You've been here before, recently. And now the question is, it closed lower than these numbers. So to a degree, it looks like it peaked out. Support way back down here at 84.23. It's not all that far, believe me, but that's where I'd view it. And for the time being, because price ratio here is still over that 18-week average, it still favors, even though it's giving up some, it still favors gold over silver. When you come to the silver chart, you see the bearishness here. Notice how the 100-week average was your resistance. Then the market fought a battle at the 18-week, and now it's begun this pattern that started with this break last week with the lower close, but you needed to get under all this, and you finally did it. You're putting into play the potential, at least, of the lower Bollinger Band at 1468. Interestingly, if the market rallies, the 18-week average is over this last rally high of 1531. So I would expect something in that neighborhood to be the resistance point, regardless of what takes place. But going home, the bears have control. Then we get to the copper market, which lost about 2.5 cents right now. You've had a pattern of higher lows, higher highs. You've really not been able to get up to the upper Bollinger Band. The battlegrounds become right here, that 100-week average of closes. Momentum is still pointing to the upside. Remember, it doesn't get overbought or oversold on a weekly chart. It's either pointing up, down, or neutral. This is still in the up category. So I see the bias up, the trend up. If you get under 288.35, that could be the problem for the market. That would break this pattern of higher lows, higher highs. Supposedly, the week of April 29th, we are going to see our trade delegation go to China, and then on May 5th, the Chinese trade delegation is supposed to come to America, and the old story, and we're all tired of hearing it, they're supposed to get a trade deal done. Remember this problem. We keep digesting this. What's the deal going to be? And when it comes out, has the market digested it already? I don't know. In the platinum market, the resistance, excuse me, allergies. The resistance is higher lows, higher highs. The battleground for it's right here, the 100-week moving average. Now, the first challenges, and I talk about this so often, when you first hit a Bollinger Band, be it a top or a bottom, it is not uncommon for the market to back away from it. And that market did it. It did it here too. I am not saying it has to get back to the 18-week moving average, but to back away a little, that makes sense. Now you challenge it again, it doesn't back away. Still resistance. If you go through this, then the 100-week average, because it's above the market, becomes the resistance. Next week, it backs away. Now it makes its move to it, and that's where you're at. So, in order to, you've hit your targets. You can go higher, but this isn't going to offer the same resistance it does on the first time when you hit it. In the palladium, I say that you've ended this swing to the downside. I am wrong on what I'm saying if this week's low is taken out, and that's because you have an outside week up. But with that outside week, you've now got higher lows. You've got, if you look at this high, it was 1403.50. You went to 1410.40 today. So I've got the higher highs, higher lows, the bias up since you settled over the 18-week average. Momentum is no longer pointing down. I'll call it neutral. It's floating right here. What I wouldn't want to see taken out is this week's low. Barring that, the question is, from that peak to this break low, how much of that can you make up before you run into some resistance? Last, the dollar index. The dollar index is just stuck in this sideways action. You're not following through to the downside. You're back in an uptrend, but I would not be surprised that you don't follow through to the upside over the 97.50 area, simply because each time it's been challenging that number, it's backing away. We'll find out, but that's how I'm reading the currency trade. You know, one of the things I like to do is in the morning, prep you for trades. Now, I'm not talking these videos you see on YouTube or on other websites. I am talking my subscriber video, which is a lot different. Number one, I'm not in it, so that makes it different. I'm talking over it. The charts look just like this. And what I do is I'm going to review 40 futures charts and 5 ETF charts. Then I'm going to start with it in a certain way. So I'm assuming you got your cup of coffee. I'm recording at about 6:30 in the morning. You'll see the time and everything going on, and I review in a certain sequence all the markets. The reason I do it in a sequence, you may want to be looking at the grains that day. You just grab and pull the video where you want it to be. You might want to watch the whole video. You might just want to see the first 2 or 3. But the fact that I do them in a sequence all the time makes it easy for you to get around it. The next thing I do is I start talking what I'm seeing. And unlike what I'm doing here, I am going to say, buy at this number, sell at this number. Here's your profit objective. Do this, do that. I can't do that in these videos, not allowed to. It's not that I don't want to, not allowed to. I'm a broker, and that's the rules of it. You've got to be behind a user ID and a password so that it's not available to the general public. A subscriber is not the general public. So as I look at this, I'll tell you what I think the pros are doing, what the chart action is. If there's a piece of fundamentals that you should know about, I've already read it before I'm beginning to go in the market. At least I know what's going on to that moment. So what do I get for this? Because I'm getting up early, giving this to you. Well, 26 cents a day, only committing for 30 days. It's going to run $7.95 for the first 30 days. You can quit if you want to. If you want to keep going, you have 2 ways to do that. I go then to $15 for 30 days, or you can buy a 1-year subscription for the equivalent of $13 a month. Just pay it up front. Away you go. How do you do this on the website? Just go to our website. On the website, under the word education or research, you'll see a pull-down menu. It says Ira's Morning Subscriber Video. Give it a click. It explains it. Put in your card, PayPal, any of the major credit cards. It'll work. And I'm Ira Epstein. You have a great holiday weekend. I'm going to take a break finally, and I will see you all Monday.